All right, folks, my next guest sees a monster fourth quarter rally. Get this, S&P 500, we end the year at 7,100. That wouldn't be too bad, so let's do it. Let's bring in now stock trader, Almanac, editor-in-chief, Jeffrey Hirsch. All right, so I like the number. How do we get there?
It's 20% times the close of December 31st, 24, 58.81. It's just, you look at the charts, you look at the post-election year seasonal pattern since 85. We're looking at another 20% year here.
What is the reason for that, right? I mean, in the last few years particularly, the seasonality thing has really worked out very well. The negative stuff like selling may go away, or, you know, September's going to be ugly, or October's going to be extraordinarily volatile. But the more positive stuff, the lines themselves have been just on point.
Well, with the post-election year, you basically have a president coming in and trying to do as much as they can to hold on to the House and the Senate in their midterm elections. So it's kind of like a first pre-election year where they're really trying to prime the pump so that they hold the Congress in the midterms.
All right, and here we have it, the post-election year, your seasonal pattern. This is where we are now.
Little October blip, little October phobia.
And this, how long has this been in place?
Well, this green line is since 85.
Okay.
This is when the post-election year has become the best year of the four-year cycle since 85. Up 9, S&P down 1, about an 18.1% average gain. Used to be one of the worst 2 years. It's changed a lot in the last, several decades. You can see my aggregate cycle here. That's a combination of the seasonals, the fifth year of the decade, and the post-election years also pretty strong. So this is where we're looking at that potential 20%.
Yeah. And to your point, I mean, even if we go beyond this to the midterm, start going toward those midterms.
I get a little concerned about the midterm year. The weak spot of the four-year cycles, Q2, Q3. I think we could get a little trouble, maybe a little bear, and then we end up.
Let's talk about some ground floor opportunities.
Yeah, these are companies. Go ahead.
StoneX, for those listening on radio, SNEX. I know the company. We have some of the folks come on the show from time to time.
It's impressive. They're probably the biggest small futures and commodity shop out there. They've been an acquisition recently of R.J. O'Brien, and they've become the biggest out there. They own Forex.com, everything from delivery, Forex trading, risk management. Valuations are great. It's
I love
pretty
Captain
solid.
Rooney.
Yeah, I own that too.
Okay, and I've seen the stock. It's hit my screen because, to your point, it's been screaming.
It's under the radar, which is what we look for.
Commvault, CVLT.
This one's a little richer, but it's in the AI cybersecurity space. P's like 45, price to sales about 7.5 or so. But they're doing things to protect AI data and the data centers, and it's just continuous business platform so that if your data goes down, they prevent against.
A name I've never heard, but I dig it. ArchRock, AROC.
They're part of the energy, fueling this data center and the AI thing, because they're helping out the natural gas producers. They got equipment and services, and again, really, really cheap.
All right, you like the nuclear power space, and we kind of know all of these names. I don't know, for the last few sessions, this consolidation to CEG has stood out a little bit more. I think a couple times it was a top performer in the segment.
Yeah.
Is it pulling away somehow from the rest of them?
It's a little bit more expensive, but they have the most nuclear power of all of these. They're big into that and clean energy. So these all have great dividends, great price to sales ratios, great PEs. So solid, a little more conservative than all the hype we're seeing here with the.
Although now to your point, right? Historically, it's a haven. The market gets hit, and this is where everyone kind of runs through this and staples for the most part. But now they've got the added nuclear power urgency factor to it, and then the dividends on top of it. It's hard to imagine that this you've got to have some of this in your portfolio.
I think so.
Yeah, absolutely. What's your biggest worry right now?
It's got to be the China tariff battles. That's where we're getting this October volatility from China USA. That's probably the biggest thing right now.
Well, they're going to meet soon. Maybe this is just saber rattling until then. If some sort of deal is announced, I mean, that could be a catalyst out of this world.
Yeah, and I think any week this year in volatile October is the time to get in. Best month to buy, especially techs and small caps. It's the bargain month. It's the bear killer.
My man.
Thank you, sir.
Appreciate you.
Appreciate
All
you.
right, folks. Thanks, Jeff.